All right, guys, welcome. So there's a battle going on in the stock market this morning. I want to point that out in the charts. We're going to get right into it. Leave me a thumbs up, guys, if you find value. I'm trying to get at least over 500 on a video. I'm not sure if I've gotten that yet, but I would appreciate that. Let's get right into it. So triple Qs is where I see the battle happening right now. And you can see here, basically coming off the March 2020 lows, if we can get my indicators back. There we go, fix my chart. My indicators were gone. Coming off the March 2020 lows, we've got this trend line, this green trend line right here. And we've held it for a while, held it right here back on in November, and then we've been just kind of wedging higher. So right now we got this bearish rising wedge pattern. We're starting to break down. As I zoom in, you can see right there starting to break down. Not completely impulsive yet, and you can see on the hourly chart here, you know, here's the breakdown, and the dip buyers are there, and there's a battle going on, basically, is what I'm saying. And so, the bulls are trying to recover this trend line. The bears are trying to impulsively push this price action down. So something to watch. Again, that daily close is important. And so that's what the battle, they're battling it out for the daily close right now. If we get the daily close, and ideally, you want to see an impulsive breakdown, the more impulsive, the better. So ideally, we're going to break the lows and close kind of at the lows of the day. That would be a more confirmation that this is a sell signal in the triple Qs. Looking at the daily, you want to see it break this probably 329.55 or something like that, and close below there on the daily chart. You get the close down there, then that's another sell signal, kind of like what we had right here. Is it going to be another false breakdown? Could be, but then again, could not be. You have to just take the signal for what it's worth, and then wait. And wait to see if it's a false breakdown. So again, we don't have the sell signal yet. There's still a little more work to be done today, but we'll see how this kind of trades out throughout the day. And if it sells off more and starts to close lower, then likely that is a sell signal in the Qs. Where does that set us up for? Well, we've got some support. Kind of, if we zoom in, we've got some support. Yeah, it looks like it's right down around here. Could probably adjust this slightly, maybe somewhere right in here, 313.55 or 313.50, somewhere right in there. Got some more support down here at 300. Below that, I think we're going to get down to 280 or so if we get, down around there, which would be the bottom of this trend line. Right down here, see this trend line? That's this ascending trend line. We start breaking this 300 area. Then I think we're heading down to 280. 280 is going to go all the way back to the bull market in triple Qs, kind of the upper price channel right up there. You can see on this weekly chart on Qs, lots of reactions along that upper price channel. The entire bull market, it just traded within this channel. We got outside of this channel way up here. So again, we start breaking down. I think we come back down for a test of the top of that channel. So what am I looking for? Right now, the dip buyers are there. They're trying to recover this. If they fail and they can't recover it, then we should probably sell off into the close. And that's what I'll watch for. SPY, nothing's really changed in the SPY. If you look, we'll start off with the weekly chart. 2009 lows, bull market, trend line is in blue here. Support all through here. We held support. We broke trend right there in 2018. That's when I started this channel, when we broke trend. And so, I've been bearish really ever since, longer term bearish because we broke the bull market trend line. So yes, we had 2019 was a rally induced by the Fed. COVID dropped. 2020 was a rally induced by the Fed. And where are we right now? Well, we're right there at that trend line. See the blue trend line? So we overshot it just a little bit on the weekly chart. Week's not over. And, we're still right in that area. So we could trade here a little bit longer. On the daily, you can see we're below that trend line. We were above it yesterday. We're just kind of trading around this trend line. So again, I don't see any technical change. there could be a blow off top where we ramp through this trend line and go higher and then it fails. That's completely possible. So until we start to see signs of a breakdown or weakness in the Qs, that sell signal, and then probably some more selling here in SPY, we're kind of in this area. We're going to probably stay here till we get those further signals. Another way to look at this is coming off the March 2020 lows. Right here, you got a trend line just like the Qs. Held support right there. Held support, made a bearish rising wedge. See the upper, I have it marked out in red right here. I can mark that out in green if you guys want, just to kind of see the bearish rising wedge. And then we broke with the sell signal, and we've just been back testing basically. So we kind of back tested a little bit, and now we're starting to kind of drift sideways to down basically from that trend line right up here. So that's another way to look at it. But again, I'm looking for Qs, looking for more weakness in Qs to kind of help confirm that we're going to see lower prices in the SPY. TLT long-term bond. I've talked about this in the last few videos. This is bouncing off support today. So here's your downtrend line in TLT. Had this marked out. We came right down to it. Just yesterday hit it. And, now we're bouncing off of that as support. So that's your support. Resistance is, resistance is kind of quite a bit overhead. So again, I could see lower prices in TLT. This is downtrending. There is no bullish divergence. Here's the RSI. I want to point this out. We had bullish divergence. It looks something like that, but it burned through it. So now no bullish divergence, just bearish momentum in the TLT. So bearish price action, bearish momentum. That's what I see there, which means interest rates are going higher, basically. And so look for interest rates to rise. As interest rates continue to rise, you're going to start to see pressure in the markets, I believe. Okay. All right. I want to highlight gold because we're in the area I've talked about. I've talked about this for quite a while, months, maybe weeks. I don't quite remember, but basically we're in the buy area. I believe we're in the buy area of gold and gold miners. Looks good to me for long, at least starting to build long positions. You don't have to take it all at once. I mean, I never buy a single position all at once. But here's what we got. This is gold bullion. And what we're looking at right now is today, let's go into this is a daily chart. Today we made a slightly lower price. We dipped down below 17. We hit about 1769. And I was looking for anything below 1775, 1776. I was looking for any kind of prices right below there, as long as it keeps this bullish divergence. So here's the RSI, and you can see we have bullish divergence now. This it's not confirmed yet, but we made a higher low just recently this morning in the RSI. So this low was a higher low in momentum, even though it was a lower price. That's a divergent low. Now, it's not confirmed, and what I mean by not being confirmed is I want to see the RSI start to turn up now. If the RSI starts to turn up and point back up, that would be confirmation of bullish divergence. And that doesn't mean that we can't go lower. It just means we have bullish divergence now, and it's likely that any new lows will probably be divergent lows. So it's a basing pattern. It's showing momentum is starting to build, and buyers are down here. And again, and I'm one of them. I was buying miners this morning. And so again, what do I think we get? We could go, I think we could probably, I want to see it turn up. If we turn up, we could dip down and maybe hit this trend line at 1750 or so. But we're in the area now where I think it's close enough where, 1750 is only 1.5% in gold bullion. So, yeah, I like it. Looks good for a buy zone. Doesn't mean it's going to work. There's no guarantees, but it's the area. It's an objective area to be buying, to be buying gold. And each miner is different, so you have to look at the chart on each miner. But I just want to point that out. Let's look at the dollar. So the dollar's, moved higher today. Ran into resistance right here at 9. It's about 91. We've had this marked out. You can see we held that as resistance here. Here we broke above, but then we failed, and we did another back test. We're right there at 91. Where does the dollar go in the short term? I don't really know, to be honest. Looking at this, I think it could probably go higher, up to 92, make a leg up to 92, start to overshoot 92. That's all completely possible. So I'm watching that, but and the dollar does, it did have bullish divergence. Here it is right here, and I have it circled. So again, that's all factored into the fact that this was a breakout here, and maybe this was just a quick pullback, and we're going to make a new higher high and continue to trend higher in the dollar. Again, there's a lot of dollar shorts out there, and so that should potentially do some damage to that trade, unwind that trade a little bit. Longer term, I think the dollar's going down, but everybody's piled into that trade, so you could have some unwinding of it before you resume that trend, that longer term dollar down trend. Here's another look at tech, XLK. The thing is that I'm looking at, here's your March lows trend line right there. We just were walking up the trend line. Now this one's had a couple false breakdowns, so you really want to see a nice solid red close on this to help confirm, because, and we had it here. This was a clear sell signal. It just was a bear trap. Sometimes that happens. So again, you got to take the charts for what they tell you at the moment that you have, and then just act accordingly. So we had a sell signal. That sell signal showed that it was going to be a bear trap. You cover, get out, take your loss, wait for the next opportunity. And so it's a battle here as well. Negative divergence, you can see right there. So that remains intact, where momentum is fading, basically. Momentum is weakening, and that's what these divergences show, and prices continued higher. So you're waiting for that tipping point, basically, and that comes in the form of a sell signal or a break of trendline support. So we're starting to break it now. We'll see how the day closes. Again, if the dip buyers fail, I think they will, but look for selling into the close. Here's Apple. All right, so Apple, here's your trend line in Apple on the daily chart. You got reaction, several reactions. I think there's 5 there. About 6, actually. 6 reactions along this trend line right here. And we just broke. So broke yesterday, and then we gapped down, and we're selling off today. So that's a sell signal in Apple. And, provided that the day closes down here in this area, if they recover it, that's a pretty good recovery in Apple. It's not impossible, but, from where we're at, that would be a move of 4% or so to the upside for a recovery. Yeah, I think if they get within this area of a 135, 134, probably even up to closing up around 133.50 or so, then it could be a false breakdown. But as of right now, it's a sell signal. It looks like we're going lower down to about 126, 125.50, 126.30. That's a zone, support zone. But again, I think we're probably going to break that, and we'll probably run into the 200-day. It's been a really long time. They haven't touched the 200-day for almost a year. So I think probably come in and test the 200-day and get a reaction around there. Where's that going to fall? Well, I'm not exactly sure. The 200-day is ascending. You can see it right down here at 111. So by the time we get down there, maybe it's at 118 or so. I just want to point out this whack-a-mole game that the markets loves. It's been playing recently. So you get one thing that goes down. You can see Apple's down 2.5%. There's no real reason why Apple's down 2.5%. It's just technically based. It broke trendline support, and then just randomly Amazon's up 1%. So it's just the money is kind of coming out of one and jumping into the other, and it's just this rotating thing where we've got it's like it's just the nature of of this bull market that it's been going on, that they they don't want to let it break, so they continue to try to keep it up. Buyers are trying to, buy the things that are down. They sell money comes out of Apple and goes into Amazon, and then money will come out of Amazon and go into Apple. And it's just this back and forth. We got to get through this to see more downside, obviously. Let's look at these solar stocks. They're starting to break. Here's TAN. This is the solar ETF. It has not broken yet. You can see trendline support all the way from the March 2020 lows. Just nice clean up trend line. I mean, this thing's just been algorithmic, I think. But you can see here, we're starting to see some weakness. We're still above trend, so there's nothing, no sell signals. But we've got some negative divergence right here on the RSI and the PPO. So this was a divergent high right in here. And we're looking for this trend line to break right here. So it's a setup, it's not triggered. It's not it's not an actionable trade yet, but there's a setup. One of the reasons why I think it's going to go soon, you can see First Solar breaking down today. That's a pretty impulsive breakdown, down almost 6.5%. We'll see how the day closes. But again, here's First Solar's trend line from the March 2020 lows straight up. I adjusted my trend line after I saw a couple breakdowns and stuff. I just set it to here. Drifting sideways, did a back test, and now we're getting that kind of breakdown action where you're seeing the impulsive selling. Here's Run. Here's your March 2020 lows on Run, Sunrun, and nice uptrend line. Broke trend, back tested once, didn't quite get it the second time or the third time, but got close. And obviously these are huge moves, creating a secondary trend line right here on the daily, and we're coming straight down into that. Now, there's no negative divergence on this thing. Well, there was negative divergence up here. This was a divergent high. So yes, that did signal a trend change. But we got this lower trend line. So I'd look for a break of that, some sort of impulsive sell signal break of that. And then going back to tan, we'll probably start to see the break of tan. Etsy, you can see right here, Etsy's had a couple trend lines, but here's the first trend line, broke that, back tested. And then we created this secondary trend line right here on the daily chart, 4 reactions, and you can see where we're trading at right now. So again, this is a battle going on, same as the Qs. This will likely go the way of the Qs. If the Qs sells off and large cap tech starts to sell off, these other tech names are likely to break too. So yet to be decided. Obviously, negative divergence right there on the RSI and the PPO, signaling a trend change is likely. You have a bearish rising wedge right up here. So again, just looking for that sell signal. I think it's going to come in the form of a gap down. And so we might not get it today, but just kind of waiting for that. Let's look at Peloton. So there's a breakdown today in Peloton. And again, Peloton on this trade, I've really documented this trade on several videos. The entry, I told everyone when I was getting into it. So here's my entry right up here when I circled it right there. And that's my initial entry. The reason why I entered right there is on a couple reasons. One, we have this trend line coming off the March 2020 lows on Peloton. It broke trend right here in November 9th. But that wasn't necessarily the cleanest sell signal because there was no negative divergence on the daily chart. You can see here that when we broke and price was heading lower, momentum was also heading lower. See the RSI, how it's lower price, lower momentum. So that's not diverging. Usually for a divergence, you need to see momentum heading in a different direction from price. So then we got this big back test and it ramped all the way up. You could tell it was starting to run higher. And so it ramped higher and they gapped it up on earnings. Or actually, this wasn't earnings. This was some acquisition news that they were going to buy some other fitness company or something. And they gapped it up. And when they gapped it up, the RSI right there didn't make a new higher high. So that put in your negative divergence. And then from there, it turned down to confirm. See how the RSI turned down? So that confirmed your negative divergence. And that was pretty much a back test right of that trend line as well. It was slightly over, but for the most part, it was right there. Rejected, and then we've just been treading water ever since. So I'm just, the entire time in this short, as it treads water, I've just been waiting for it to break down. Now you're seeing price break down. This thing's down 7% today. So, from the entry, which was right here, to where we're at today, this thing is down, about 14, almost 15%. And, I think there's more downside to go because this is just breaking. So next, first level of support, kind of major support, I guess. We have some support here at 118. But I think the major support where this thing really wants to go is 98. Could go lower, but I think 98 is, about $100, we'll say, is kind of a good target. And so we'll watch that. If we break that, then head down to about 80. We break that, we'll have to see. There is a potential level down here at 50. I don't know if it'll get down that far, but there's some levels in that one. Qualcomm continuing its breakdown. So again, this was a short that I've been in, and I called this. We've been watching I was watching Qualcomm for a while, waiting for that good solid sell signal. We got the sell signal right there. There's your sell signal. We had negative divergence intact when we got that sell signal. So that was a valid sell signal. They did a kickback rally and recovered it, made it look like it was going to recover. So this day right here on the 3rd, Qualcomm opened right here, making it, that was a pretty bullish opening. But as soon as it opened, the seller stepped in and just smashed it right back down below resistance. And that was really your tell. The following day, earnings came out, they missed, and it gapped down huge, and hasn't looked back since. So we're just trending down now. Momentum was signaling a reverse in trend. Momentum was starting to signal a downward trend in momentum, and now we're starting to see that price. Now we're starting to see price trend down. Momentum leads price typically. So you'll see it in the momentum, and then you wait, and then you'll typically start to see it in the price. And now we're seeing it. So gap fill is the obvious first target, 130 on Qualcomm. It's so obvious though. I think they'll probably step in a little early and buy it. So I'd look to cover if you're if you're trading this. I'd look to cover. Probably get a bounce there. The way it's going to likely work is we'll head down here, get close to gap fill, bounce back up to resistance, maybe around this 142 area, and then start to work our way lower, ultimately ending this trend down here, somewhere down here at gap filling around 95, 94, or something like that. Okay, Tesla broke that 800 level, that 801, 800 level I was watching. It broke, and so we're watching. Now we got to wait to see how the day closes. The dip buyers could easily step in on this one and recover it. But if we get, what I'd like to see is the sellers continue to push this thing down. Kind of in, again, it's a battle right now going on. They're trying to push it down, but there's buyers in there trying to prop it back up. We'll see who wins the battle by the end of the day. If we get the daily close down towards the lows, then I think it's likely we're heading straight down to 625 in Tesla in pretty short order. So watch for that. Okay, that's all I got for this morning. So guys, again, leave me a thumbs up, and I'll catch you on the next one.